Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, we ended 2016 kind of on a weak note here. Most of the selling materializing here in the Nasdaq. That was off about 0.9% on the day. But the Dow, S&P, Nasdaq, Russell's all negative across the board. We did see crude catch a little bit of a bounce. Bonds as well, continuing its bounce off of some support levels. And the gold kind of settling in after a little rally here over the last few days. But we'll see all of this on the charts. And as always, folks, starting off our analysis with the S&P 500 dailies. So one of the things that we did see here on Friday was the fact that we closed below that 2250s. Now, I was looking at 2250s as a shorter term support level. The main one I'm going to be looking for the markets and how they behave at are the 2215. So that's this level, the prior area of the breakout. It's a little bit clearer to see on a 60-minute chart. Here's a 2215s, right? So we're still pretty far away from it. We did close below those 2250s. So, come the first couple of weeks of 2017, if somehow we start to meander our way back above 2250s, I would think that that would be a positive development, and also obviously a break above the 2275s would put us in a good standing for continued breakouts across the board from equities. One thing that I did want to mention here is that as we take a look at the S&Ps, a lot of the heavy volume selling has been missing from the S&P 500. That's a good thing. Those are called distribution days. It's a sign of institutional selling. There's a lot of financial strength coming from the S&P 500, a lot of renewed energy strength. Also, so those are things that are helping the S&Ps to outperform, like the Nasdaq, which suffered a bigger percentage loss on last week Friday. And we'll just continue to watch the S&P 500 to see if it does maybe push up towards new highs and continues this rally higher, or if it starts to stack up additional distribution days signaling selling, which might also cause us to come down and test some of these support levels. As we move over to the Nasdaq here, Nasdaq has been the weaker of all of the indices that we're watching here, and it's just evident right here in the relative strength angling down there. We were watching a bit of a balance form on the Nasdaq. We tried to break out of it last week, Tuesday, and we failed to do so. We actually hit a new intraday all-time high, but failed to close at a new all-time high, and then we faded down back below it. So when we take a look at this here, what we see is here's that balance that we failed to close above. We actually faded, I should say, all the way back down to the lower end of it. And on Friday, we kind of failed that right below the 5400s. And if you recall, 5400s was one of those areas I was kind of more like a key support area. I was looking for the Nasdaq to hold, just because of the fact that we had some prior resistance coming in, then we had some support, and it's also a whole number. So closing down below it sort of gives the impression that there's still a lot of sellers in the Nasdaq, and buyers don't have a lot of conviction at these levels, at least in the Nasdaq, right? It seems to be shifting more towards the S&P. Definitely, it's shifting towards the Dow with a lot of the financials rallying, right? Look at the relative strength on the Dow. So we do see a little bit of like rotation going on here from the tech stocks into more of the financials, the industrials, and the infrastructure plays. And we'll see how this plays out over 2017. Again, all things being equal, we are still in an uptrend. We are tracking low distribution day counts on the S&P 500. However, we're seeing higher or elevated distribution day counts on the Nasdaq. So if there's any sort of potential pullback in the works, it could be materializing in the Nasdaq, and we might see the first inklings of it materialize in the Nasdaq, as that has been the weaker index ever since the post-election rally. As we move over to the crude contract here, we did see the crude catching a bit of a bid off the lows. And folks, as we take a look at this on a longer term chart here, one of the things we see is that we're still hanging out right around $54 per barrel on the crude contract here. And this still looks like it's trying to attempt a breakout up and over these levels. As we've pointed out in many prior videos, the reason we're looking for that is it seems to suggest here, if you look at this longer term chart, that there's a bit of a bottom being put in place on the crude. As we go to the bonds as well, kind of similar action. In fact, we have to zoom out just a little bit more here to see all of this. So if you look at the bonds here, We go back to like the 2013 and 14 time frames here. We see multiple bounces right around these 123 evens on the 10-year bond futures. That is the place that we're starting to rally off of. And if you recall some of my conversations or discussions about the bonds, is that after a protracted sell-off like this, if you run right into a area of support, chances are you'll catch a little bit of a bounce off those areas, form a bit of a balance, and then the market will try and decide if it wants to rally from that point, if the buyers are overpowering the sellers, or if that downtrend is going to continue. And again, breaking of that support level would suggest or imply further price progress to the downside. And finally, as we move to the gold contract here, gold catching a little bit of a bounce too, right around the 1120s. If you look towards the longer term charts here, there's really nothing in this area to suggest that we would get any support. So right now, this could just be an oversold bounce. If this does materialize into a bigger bounce, I would expect that the 1200 would now serve as a bit of resistance. This is a weekly chart, so you can see on a weekly time frame, there were multiple supports here. Even if you kind of take this out just a little bit, let me see if I can drag this out. You can see that 1200s even acted as a bit of resistance earlier. So folks, as we trade below these 1200s, it would suggest on this chart that potentially down the road 1050s might be a target. That's just this final area of support in this level. But if you do materialize any sort of a bounce here, watch to see if these 1200s serve as a little bit of resistance as that rally tries to catch a bit of footing. But folks, on this last trading day of the year, no big breakouts that we saw. In fact, we saw volumes just kind of dry up across the board. So what we're going to be looking for in 2017 is that volume to reappear as traders come back to their desks. And we're going to be looking for continued breakouts. And folks, the game plan always has been, always will be, looking for the best relative strength stocks, breaking out of recognizable chart patterns, and ideally on big volume. But folks, other than that, have a great trading day ahead. Happy New Year to you. Have a great 2017. Best of skill to everyone out there, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.